Hello and welcome to Ausbiz Capital Investor Connect. Today we're talking with Aguia Resources and Executive Chairman Warwick Gregor joins me now. Warwick, it's been 6 months since the takeover of Andean Mining. How satisfied are you with what you have achieved?
Very. It's gone seamlessly. The team is combined. We've got on with the job. 6 months after the takeover, we've poured the first gold. I think that's quite a record achievement and we should be proud of that.
And how did the company achieve its significant milestone on a capital expenditure of less than $2 million?
Well, fortunately, there was already a pilot plant on site that had operated 3 years ago. All the basic equipment was there when we turned it onto a continuous basis rather than a batch basis. It presented a few little mechanical issues that we had to sort out, but what a tremendous advantage. We had a plant there all ready to go, all the permits, the time frame is just sensational. So we're starting from a small base. You can do that. A small plant can easily be expanded, a lot easier to get operating perfectly than going into a big monster and trying to get that going again. So, very happy.
And regulatory constraints have stopped Aguia from referring to Santa Barbara as a mine. When will this be ironed out?
Well, sometime this year. The Chapter 5 listing rule says we're not allowed to call it a mine because we don't have a JORC resource. Technically, that means you can't have a mine. Well, let's not argue with the stock exchange. It doesn't get you anywhere. Let's just accept that. Now, we could possibly extrapolate from the existing underground workings and come up with a smaller resource. That could actually happen within a month or two. But the more conventional approach is to get a couple of drill rigs going, start them turning February, March, and then perhaps by the middle of the year we'll have had enough drilling to come out with a JORC compliant resource so we can actually say we've got a mine. But in the meantime, we'll just be producing gold.
And the first gold pour was a few weeks behind schedule. Do you anticipate any other delays this year?
No, we didn't. Perhaps we should have anticipated that the Christmas time was coming and things shut down. It's hard to get equipment. But that's very minor in the big picture of things. So far, everything else has been going well. Always expect the unexpected, but there's nothing terminal. There's nothing that's going to make us have to go out and raise 10 million from the market because we've stuffed up. It's not like that. It's a lot more simple and a lot more predictable.
And you have ambitious expansion plans over the next 3 months. Are they on schedule?
Yeah, they're on schedule. We'll be going from a capacity of 30 tonnes per day to 50 tonnes per day. But once we get to that in April, May, we're not pausing, we're not stopping. We will continually expand from that point. That depends on the drilling and cash flow. But the most important thing with underground mines is getting development, getting your drives worked out, your stopes. So that takes time. So it's a progressive exercise. It's not just something you turn on one day. So we think we've got tremendous resources, lots of potential, but it takes time to bring them to light.
And you've described 2025 as a potential game changer for the company. What are you most looking forward to?
Steady cash flow and underwriting the future of the company, getting the phosphate going. The drilling is going to be tremendously exciting. It's not as if it's exploration drilling, it's brownfields drilling. We know where the ore body is. We just have to go, I shouldn't call it an ore body, the mineralised vein. We know where that is. We will drill above it and below it and keep drilling. And I think people will be really surprised pleasantly when they see how consistently we can come up with good intersections.
And you've signed an MOU to lease an existing phosphate processing facility. So how will this benefit expenses?
Well, if you build a brand new plant for anything, it costs a lot of money. The existing plant that we're looking at leasing for 10 years plus another 10 is already been operating. We know it works. It's located within a large industrial complex where it occupies only 10% of the footprint of the company that's operating there. We'll have good support. It's not as if we're setting up a project like Robinson Crusoe in the middle of nowhere with a need for all the infrastructure. It's going to be very convenient for us to combine with the existing company, which has been operating on that location for 100 years, very well regarded, very well respected. So it greatly minimises our startup risk and our operating risk, and it gets us into the cash flow a lot sooner than we would have otherwise been. And we're looking forward to doing that early in the second half of this year, depending on just how quickly the lawyers complete the documentation and we get the ball rolling. So that's a whole new growth curve, which we're very positive about.
And with a runaway gold price at the moment, how do you see this benefiting shareholders?
Well, it can only make more money for them. Each month you see another $100 an ounce profit margin. I've never seen a better time in 50 years of being involved with markets to be involved with gold, because it's not a spike where everyone makes money and runs away. This is an accumulation of gold. This is a long-term bull market. Now, if you're out there exploring or trying to buy properties, well, I think the price of all the projects will have gone up. When we picked up this, the gold price was only about $1,800 US an ounce. It's now $2,860 an ounce today, and that's all just additional cream on top. So, timing couldn't have been more perfect.